Hey everybody, it's Bob, a trade genius. Got my good friend Phil here. So the Fed lies again and caused anxiety and joy. We're going to tell you what continues. Stay tuned.
Trade Genius.
Okay, Phil, I'm a bit annoyed. Jerome Powell gets up there, puffs his chest out, saying it's going to take us at least a year to beat inflation. PCE is our preferred number. Market goes into freak out mode, blows a bunch of stops, makes people sell before the end of the year. Turn around on Friday and we find out that PCE is soft and we're probably looking at deflation next year. So what I wanted to do was throw it over to you because we got our foreshock now. Now we got to worry about the main shock. What happened last week until this morning was just a warning. It's not the one you panic on. This next level, you panic. So I'm going to throw it to you, Phil. Walk everybody through the levels. Give us worst case, best case, and then where we think we're going to go once it hits those targets.
Sure. So right now, I think the big takeaway from the markets is you could be at a potential top in the markets. And the reason for that would be just kind of what's going on with the macro data underlying in the economy. The jobs primarily, to me, is waving a red flag, and the bond market uninverting, right? Most recently, the 10-year, 3-year has, or 10-year, 3-month, I think it was, has uninverted. So that is a big red flag on that uninversion that complements the 10-year, 2-year. So switching over to the chart. So this is the drop that we got. Now we were using our super histogram. We were getting some warnings on the 4-hour, and then it finally rolled over. We hit the 4-hour 144 moving average on this dip, and then we've bounced. Like you said this morning in the room, look for a gap down, right? Kind of capitulates the move, and then we bounce. And so because we're in this situation where, hey, it's kind of late in the cycle here, this could be a potential top, you really have to zero in on potentially the 618, and I'm showing you the SPX, not the futures. The 618, which is 59.97, so just getting back to 6,000, or potentially the 6042, which is the 786. Effectively, what we've done is we've run up to 6,100, and to me, that's one of the target areas for the high that I thought we would get to, maybe as high as 6,400 possibly. But to me, if this is all we got, then that would be mission accomplished going into this move, because you and I have been talking about a blow-off move into the end of the year. Maybe into the first week in January, but that to me is just getting a little too detailed. It's like pretty much mission accomplished, right? So for me, that's key now coming up to these levels. Today almost already got up to the 618 just on that huge move up that we kind of there was like a blow off move today in just the way that the market covered the shorts and rallied off of OPEX, and then we got OPEX wrapping up here in a little bit, and this could still continue to push up. But next week, right, we're supposed to have this rally, right? Seasonal rally, what they call the Santa rally. And so for me, if we're going to be up Monday, and I think today's close, getting back close to, closer to 6,000 on the SPX is helpful for next week. That essentially gets us over the hump. 5,900 was a big level for the SPX to get back over today, and they did that. Now we're over it by a pretty decent cushion. So if we can continue this move up, right, Friday up, Monday up, that would probably give us a decent green week. Next week's a very short week because of the holiday, and that also creates positive flows because of the increases the speed of the decay in the options market. And so if we do find ourselves going into the holiday, right, that long weekend, and we're up at the 786, all I'm saying is that's a spot where you got to look at and potentially view that as a lower high in this market, and we don't go higher. Now, if the following week going into New Year's is again bullish, then we should get above that 786. And then I would say you have an opportunity to make a new all-time high, but I would say that only into the first week of January, the way I look at it. So all in all, this is like season to get very defensive. Don't fall in love with a new all-time high up here, even if we get one. Look at this market from the lens of putting in a top. Unless we see something change, I think there's a good chance that we could front run the inauguration, because I think there's a lot of people now looking at that as a sell the news event and not looking at potentially maybe we top out in 2024 versus, Q1 of 2025, especially in the crypto market. I think that's a narrative, right? A lot of people think if we're going to top out early, it'll be the first half of 2025. I don't think anybody's looking at potentially putting in a top here in the next week or two and getting it done in 2024. Not really seeing that as much of a narrative, and that interests me a lot.
Yeah, I agree, Phil. And just for people's benefit, is that, I'll give my opinion. You can nod or disagree, Phil, as I go. But I think the Dow has topped. I don't think the Dow will make a new high.
Yep.
I think the small cap values have topped. I don't think they're going to make a new high. I think oil has topped. I don't think it's going to make a new high. However, I think the gold market still looks strong, and Bitcoin, I don't think has topped yet. And the reason I say that is because, gold and Bitcoin will eventually disassociate themselves from the markets and become safe havens. And now that we have the PCE softening and the Fed members out there now saying, oh, forget what Powell said on Wednesday, is that I think the bond market has topped, which means the bond yields have topped too. So now I think it's safer to start getting more heavily into the bond market. What I'm telling people in the room full of stuff that I trade is that, especially if you're in these high yield max products, is that start drifting more and more towards the short inverse side of the equation. At the very least, you're going to lower your volatility of your price performance, but you're also going to be picking up increasingly levels of higher dividends because the vol picks up, and these products are designed to profit from volatility. So that's kind of where my head is. I agree with you. Don't marry anything anymore unless it's a legacy, a family heirloom. You go into January, you better sell it, okay, when the time hits. Because look, they caught us off guard on purpose on Wednesday. They told us Powell's not going to do anything to disrupt the markets, and the first thing out of his mouth was, "We don't have inflation under control," and it was by design so that these guys can get in lower level for the final push. And I agree with you. I think by January 10th, we'll see our highs, Phil. Either it's an all-time high or a failed high. And if we get a failed high, guys, it's definitely over. We will make a new low. In fact, we stopped right at the August highs. We'll go down and we'll test that second quarter low, I think, Phil, and then actually start putting in a rounded top here. And then I think it's all over for the next 18 months.
Yeah, I generally agree. And Bitcoin's the same boat. You got to get either back over the 618 or the 786. So that's 102,000 at the 618, 104, almost 105,000 at the 786 retrace. Those are key levels coming back up. People are going to get complacent back up here. And until you see a new all-time high, right? Every time now we poke a new high, you kind of go through this exercise if you get a fairly good pullback. Same thing happened at 104. We pulled back. It actually failed at the 786. And I said, hey, if this doesn't make a new all-time high here pretty quick, it took a few days and then it did. But you kind of go through this exercise every time now. And it's only because of where we are in the cycle. I wouldn't be doing this elsewhere. But now it's important to hone in on this stuff. So, we'll see. Saturdays have not been great for Bitcoin and crypto, but Sundays have been bullish. So look for a push up. Maybe we do get a move up into these fib levels. You got to be careful. They've been very bearish after Monday. Monday puts in a high, and then it's been a battle after that. And so if we do put in a high into these levels into Monday, watch for a pullback. But if not, we gap up hard over the weekend and we make new highs, which is possible, right? It's Bitcoin. It can squeeze really fast. Then we should, if this market wants a new all-time high, Bob, this market in Bitcoin should get a new all-time high here relatively quickly, like in the next couple of days.
Yeah, and a couple of things too, and sorry for the long podcast, but a lot of our subscribers and a lot of people listening to the show have bought Misty, MSTY, and there's no direct hedge for that. And so I'm going to offer you a suggestion that I did this week with it to mitigate the impact. Is there's a double short SMST on Misty. It's a low price, trading around $6, $7, $8 range. Is that whenever you feel that MicroStrategy is getting overbought, you might want to hedge on that and use that as a kind of a buffer so you don't have to sell your Misty. I think if the market does what we think it's going to do, that'll drift down, but Misty, the volatility is going to stay high. And remember, these yield products aren't based on the cash flow of the underlying. They're based on the volatility of the underlying. So unless it goes down too far too fast, you're going to get a lot of high dividends, even if your net asset value falls, it'll still be a net good guy for you guys. So just keep that in mind. Or if you feel MicroStrategy is topped and close Misty and then buy it back later, when we get to a bottom, I think we were looking at a bottom maybe March, April, right, Phil? If it goes, our scenario plays out, and then you'll get a 2 or 3 month, reverse rally before it rolls over again. But we're taking this market week by week. But I want to throw that as a suggestion. Everything else that we have kind of pairs up nicely, and there's new products coming out all the time now from Yield Max and from Round Hill and from Granite Shares. So there's going to be a lot of ways that you're going to be able to hedge your positioning, and they're even going to come out with a long volatility product, which I can't wait to get my hands on. And I think that's really going to help take some of the volatility out of our trade. So with that, guys, hey, come check us out. I mean, I could throw some attaboys up there. We've done some life-changing trades for people. Come check us out, tradelikeagenius.com. My other business partner besides Phil, he didn't change the discount. I feel like, the guy selling mattresses, he's killing me. But take advantage of the pricing here before the end of the year. Unfortunately, in January, we got to bump up our normal pricing because everything costs more. You wouldn't believe what you got to pay for to run a trading service. So, with that, guys, come check us out, tradelikeagenius.com. We'll catch you on Monday. We're not going to do one this weekend. Have you noticed we're trying to get to 3 or 4 videos a week now instead of 6 because, we're kind of repeating ourselves a lot. But we'll do more videos as things heat up, if you will, going into next year. With that, thanks, Phil. I'll catch you guys later.
Trade Genius.